In the last few years, it has become apparent that many medical practices have potentially large and quite unexpected payroll tax exposures. That's according to Stephen Baxter, Indirect Tax Director at Mazars. Chris Ashmore asks Stephen to remind us what payroll tax is and how it works.
Payroll tax is a state tax imposed by all states and territories in Australia. It's paid monthly, half yearly or annually to the state revenue officers, and it applies to a wages base that includes superannuation and fringe benefits and can include payments to certain contractors. Just as an example, in New South Wales, payroll tax applies to annual wages above 1.2 million at the rate of 4.85%, although the rate and tax-free threshold combination is different in every state. The effect of the tax-free threshold is that if you could exclude payments to health professionals, the wages paid to reception and admin staff would not total enough for most medical practices to have to pay any payroll tax.
Is the recent change that payroll tax is now payable on payments to health professionals?
Yes, but some background first. Typically only licensed health professionals can provide healthcare services to patients. Only the health professional can charge the patient and claim Medicare rebates and claim from the health fund at invoicing. However, in practice, the medical centre they are part of performs these functions on their behalf. It receives the patient payments and rebates and then periodically, normally monthly, makes a payment to the health professionals of those receipts less the medical centre's administration fee. Historically, medical centres did not pay payroll tax on these net monies because it was considered that legally they were already the health professionals' own money. The medical centre was merely collecting the receipts on their behalf.
So what's changed?
Well, look, in the last 3 years, courts in Victoria, New South Wales and in effect the High Court also have said that the net payments to the health professionals are for or in relation to work performed by them for the medical centres as well as to the patients. So it was not relevant that the net payments they received were already their own money. The courts have held that the contractor provisions applied and the net payments were wages. The first decision reaching this conclusion was a Victorian case called Optical Superstore, and it was in August last year in the New South Wales case Thomas and Nars, where the most common medical centre arrangements were examined, and that's why the issue is now of so much importance.
And what type of medical centre is in the firing line?
Look, in simple terms, it's the medical centres who carry on the business of providing patients with access to medical services provided by health professionals at the centre. So this, in addition to your typical GP or dental practice, this can include practices of specialists, physiotherapists and nurses. And while every practice is different, in most cases the arrangements involve similar features where the medical centres attract patients by advertising the services offered by the health professionals at their centre, where they exercise operational control over the services offered to patients, including over billing and patient records, and where they exercise management control over the health professionals themselves, including who can practice at the centre, rostering, scheduling and occupancy of rooms. Typically, the medical centre leases the premises. It's the one that acquires IT and medical equipment and consumables, and it employs the administration staff. It charges a fee to each health professional, which is often 30 or 40% of the health professional's fees, and that's to cover marketing, premises equipment, wages and other service costs. The revenue authorities have a pattern of finding these type of medical centres just by basic research, including looking at websites. It doesn't mean all arrangements are caught. For example, there are numerous suburban professional centres, which you may have seen, but they are largely premises managers for multiple independent health professionals that operate from them. The professional centre has no control over the management, performance or billing of the health professionals, but simply leases premises to them.
So if a revenue authority finds such a practice, will it have a payroll tax liability?
Not necessarily. Remember that in New South Wales, for example, the first 1.2 million in wages are payroll tax free. In Victoria, that figure is 700,000. In Queensland, it is 1.3 million. This could mean that a practice needs to have at least 3, maybe 5 health professionals before it reaches that threshold and pays payroll tax. Also, and this is critical, there are exemptions within the contractor provisions that can reduce the taxable wages figure. The two most relevant ones are where the health professional performs work for the medical centre for no more than 90 days in the financial year. And most importantly, the health professional provides the same services to the public generally. It's very common in this sector for health professionals to meet this test where they work in their own practice or for a medical centre in a different geographic location or at a public hospital.
Can medical practices restructure their arrangements to distinguish themselves from the arrangements being targeted?
Well, look, the best answer is that many are trying to do just that. And the most common attempts to restructure involve a reversal of payment flows. So instead of the monies being paid directly to the medical centre by the patient or by Medicare, they're paid directly to the bank account of the health professional. And then the health professional actually pays the administration fee back to the medical centre rather than being an offset from payments flowing the other direction. While the position of most revenue officers to these restructured arrangements remains unclear, Revenue New South Wales is definitely not convinced they are payroll tax effective. It continues to take the view that the monies received by the health professionals from patients and Medicare are for or in relation to work performed by the health professional for the medical centres. We are yet to see the restructured arrangements being tested in the courts, but almost certainly they will be soon.
So what should medical centres do next?
A medical centre concerned about this matter needs to take a hierarchy of steps. You need to look at your medical centre's offering objectively. Are you carrying on the business of providing patients with access to medical services provided by the health professionals at your centre? If so, and if you are above the payroll tax threshold in any of the years since 2018, you need to seek advice on the available exemptions. You need to calculate the total wages paid and hence the potential payroll tax exposure and consider whether to make a voluntary disclosure to your state revenue office. If the projected wages appear to be over the threshold for the current year and for future years, you might want to consider restructuring the arrangements, including the payment flows. But then you need to sit tight and wait for the inevitable test case to see if your arrangement survives. Unfortunately, at the moment, there are no silver bullets to get out of this. We're very much waiting for the next case. And finally, just spreading the risk. Some medical practices need to look at their own arrangement to see that if this liability falls, who bears it, and should each health professional bear a share of the risk of the liabilities in accordance with the fees generated by them. If you're unsure about where your practice stands and what the next steps might be for you, then it's important to seek some advice. Mazars is able to assist medical centres and health professionals with these issues should you need assistance.
Steve Baxter, Mazars.
Sound cut.